couple of things you like right now.
Yeah, so I mean, the first two are more surprises, I think could be surprises going forward as we head into earnings season. The first is the materials sector. Sentiment, and going back to the Disney comment, the upgrade on weak sentiment for Disney, but sentiment in the materials sector is extremely weak. 40% of the companies in the sector have seen their estimates cut over the last month.
Okay.
If you go back to 2008, anytime it's been over 35%, the sector has averaged a gain of 6% during earnings season every time. So there's been 8 prior times where we got that negative sentiment, and all 8 times it was higher during earnings season. So when you see that negative sentiment, plus I think the dollar's...
So is this a short-term trade for you?
So this is going into earnings season the next 3 months, but also look, the dollar has been flat. It's been one of its flattest 6-month ranges on record recently. And I mean, people were expecting weak dollar weakness as the Fed turned more dovish. It hasn't come yet. But positioning, commitment of traders report, dollar longs are at their highest level since 2015. So traders and investors are positioned for this strong dollar still, and I think that could be a surprise, and that would help the sector longer term.
Okay, next on your list.
So Goldman Sachs, 2 weeks ago, when everyone was freaking out about the yield curve inverting, the sector, over a 5-day period, the financials dropped 10% in 5 days. S&P 500 was down 1%. That kind of underperformance in such a short period of time is very rare for the sector. Goldman, when those prior periods has happened, has averaged a gain of 20% over the next 3 months, with gains 75% of the time. Trades at a much cheaper valuation to its peers. The 1MDB scandal, that's weighing on it. But the move into the consumer sector provides a much more stable potential revenue stream for the company. And again, sentiment...
And how quickly, though, are we going to see that? Meaning the trigger, the inflection point for Goldman on the consumer business?
Well, so I think that's a long-term trend. But regarding sentiment, of the brokerage firms, it has the lowest amount of buy ratings by analysts. Less than 45% of analysts rate the stock a buy, versus the others, which are mostly over 50%. So there you have, again, the sentiment towards the sector is weak, and that's the best time to be going long these names when other investors don't want them.
By the way, Goldman, obviously your topic within the banking sector. Who would be number 2 and 3?
I mean, of the companies, I mean, Goldman is the top one we like. Morgan Stanley is another name that, again, this performance disparity that we've seen is another name there that looks attractive.
Okay. You have one more surprise for us?
So this isn't necessarily a surprise, but it's a company, it would surprise some people that it's an emerging fintech play in emerging markets that's backed by Warren Buffett, the Walton family, and Ant Financial. So most people wouldn't, think of Warren Buffett backing a high-growth fintech company. It's called StoneCo. They're like, for layman's terms, they're the PayPal or Square of Brazil. It's a very underserved market for the small business sector. They have great customer service, low fees.
What's the market cap of this company?
I think it's over $4 billion. So it's not a micro cap by any stretch. And the company had great earnings 2 weeks ago. It's given back a bunch of that in the last week because they did a secondary last week. But it's a company that it's growing 100% in its last quarter, and it's just the customer service.
And if you could own this, if you could own Ant Financial or PayPal, would you like this? Well,
I think this is, again, we like emerging markets as a sector, so this is another way to play emerging markets. It's a Brazilian play. Right. So if you're not going for the EEM and you're looking for a stock-specific idea, this is one we would like.
Broadly speaking, just markets more generally, I mean, you've picked out some nice, hopefully some good picks. We'll see. But are you broadly positive on the market, and are you of the view that it's going to be a multiple expansion story or an earnings story?
So I think we're looking for earnings growth to slow down. That's baked in the cake. Everybody knows about that. What we're doing is we're constantly just listening to what the market's telling us. And the best tell for the market over the last 5 years has been the semiconductor sector. You look at the relative strength of the semis, and anytime the relative strength of the semis starts to lag, 3 to 6 months later, you've seen the big sell-offs in the market take place. Semis has started to turn. 3 to 6 months later, you've seen the market start to turn. And right now, the semis relative strength is at a high versus the S&P 500. So we think that's something that is a arrow in the market's cap, so to speak. And then to the fact that sentiment, again, going into this earnings season is very negative, not just for the materials sector, but for the overall market as a whole.